Yeah, hello. Today, quickly about the timing, the stock market and the timing. What is a good timing? I would like to talk about it. So, a general rule: the best investors buy. Think about Charlie Munger, Bill Ackman, George Soros. Usually, they buy the most. They buy very aggressive when there is a panic, and they invest a lot and they don't have that. They are very powerful with the investment. They put a lot of money behind it, behind the action. And when there's panic and the people have anxieties, they invest a lot. So that is the difference between the retail investor and the star investor. The retail investor buys when the market is up and when everyone is excited, and the star investor buys when the stock market is down, when there's panic and the people are running nuts and the masses leave the market. That's when the big one, the billionaires buy. And that's a general rule, and such an important thing. People like Warren Buffett, he waits for a decade, he waits 10 years or even longer. He holds cash, and in that moment, that's his time. Of course, when the market crashes, when there's panic, there's still no perfect timing. You don't catch the right day. And you have to understand that. So he can be too early, the market can plummet even more. But general rule, when the market crashes, the stars start to get excited. That's their time. Most people don't get it. They don't. It's very difficult because the fear is there, and it's not easy to go through mentally. People would say your friends will tell you you are nuts. It happened to John Templeton. He invested during the Great Recession a lot of money. I think it was he bought, I think, for $10,000 or so. He bought stocks. He even borrowed money from friends, and he bought tons of penny stocks. Is in a time where everyone was afraid and thought like the guy's nuts. And this is a very important step to understand. If you get these, you're doing very fine. Okay, if some people have a problem with it, to save up and wait for that moment, they should invest constantly. Like, think about a bucket with water and it drips like constantly. Every month, every quarter you buy stocks, and it fills also up your portfolio, and you will have a nice retirement. It's recommended to have a retirement saving of, it depends on the recommendation, between 20 times, 22 times your yearly income, so you can have a comfortable retirement. It's a lot of money. It means you have to have 2.2 million if you want to have later on in your life $100,000 of income. It's a lot. It's a lot of money. So you should start early, put some money away, and live below your means, and save. Yeah, save constantly. Save it up on a CD or so. And once there's the stock market corrects or there's a crash, put a lot in. And the other thing is, there are a lot of people that tell you they have a secret formula and that they have figured out trends and social media reactions to several stocks, and they have this tool and that trading technology and this chart stuff tool. But there are just certain questions to understand, and you don't need all this special stuff, and certain things is like, how solid is a company? Is the company growing? How is the cash flow doing? How happy are the clients? And has it a long-term perspective? How is the history? How is the management? How is the image? Like standard things. And how is the valuation? And is the stock priced fair? And actually that's all what you need. There's so much stuff sold, there's so much noise around the stock market, you don't need it. It's just a lot of common sense. If the time is right, if the stocks are going down after a crash, the risk is lower because the price is lower. If the stock market goes up, to buy a stock, the risk is higher and the chance is smaller. So it's just common sense. It's logic, Read a lot. Warren Buffett recommends to read. He said once, oh, how do you do this outstanding performance and everything? He showed a bunch of papers. He said, my recommendation to you, read 500 pages a day, and you will learn like a machine. It's like a constant learning. You accumulate knowledge. Intelligence goes dramatically up. That's what he said. Read a lot. Of course, we don't read yellow press. He recommends books, annual reports. He reads studies. He reads newspapers. He reads magazines. Just read a lot. Intelligent people read a lot. Albert Einstein, just look how many books he wrote. It's an amazing list of books he wrote in his lifetime. And that guy wrote probably himself, he did read probably several thousand books in his lifetime. So there you get the common sense. When you read, you get an understanding what company will do good over the decades, the next couple decades. And I think like standard stuff like Procter & Gamble, Colgate, Palmolive, I talked about those things. Old oil, food companies, Kraft Foods, Nestle, things like that, Berkshire Hathaway, you will do fine. Nike, Adidas, BASF, a chemical company out of Germany, the world market leaders. With those, I think you do very well. Wait for a correction. Unilever, I have so many in my head. And then if there's a huge stock market crash, a correction, it's a good time. You buy those and you live below your means and you will do very fine. Okay, that's all for that. Bye.